So, you've probably heard about the stock market, right? It might seem a little complex, maybe even intimidating. But here's the thing, it's not as complicated as it looks. In this explainer, we're going to pull back the curtain on the Indian stock market, and I'll show you exactly how you can get started on building your own financial future. Ready to jump in? Great. Here's our game plan. First, we'll get the lay of the land, what the market is and who keeps it safe. Then, we'll walk through exactly what happens when you make your first trade. After that, we'll get into the fun stuff, building a smart portfolio. And finally, I'll share some of the key secrets to long-term success. Stick with me, and you'll be ready to go. All right, first things first. Before you can play the game, you've got to understand the field and know who the referee is. So let's start with the big picture. So what is the stock market, really? The easiest way to think about it is like a giant marketplace. On one side, you have companies. They need money or capital to build new factories, invent new products, and just grow. On the other side, you have people, like you and me. We have savings, and we're looking for a way to make that money work for us. The stock market is simply the place that brings those two sides together. It's a win-win. Okay, but that sounds a little too perfect, doesn't it? How can you be sure that the game isn't rigged? Who's looking out for the little guy and making sure everything is fair and square? Well, let's meet the guardian angel of the Indian stock market. And that guardian is SEBI, the Securities and Exchange Board of India. Think of SEBI as having three main jobs, and they're all super important. First, and most importantly, they are here to protect you, the investor, from any funny business. Second, they set the rules of the game for everyone, making sure it's transparent and fair. And third, they're always working to make the market better through education and smart policies. SEBI is the reason you can invest with real confidence. All right, let's get to the really exciting part, how you actually make a trade. It might sound a bit technical, but trust me, we're going to break it down into simple, manageable steps. You'll see how it works in no time. So here it is, the entire journey of your trade from start to finish. It all begins when you open a demat account. Think of this as a digital locker where you'll keep your shares, and a trading account, which is what you use to actually buy and sell. Once you're set up, you place your order. The stock exchange has this incredibly fast system that zips through millions of orders to find someone who wants to sell what you want to buy. The moment it finds a match, bam, your trade is executed. Finally, the settlement happens. It's called T+1, which just means one trading day later, the shares are officially in your locker and the money is transferred. Simple as that. Now, when you go to place that order, you've got your first big choice to make. Are you going to place a market order or a limit order? A market order is all about speed. It basically tells the system, I want this stock right now at whatever the current price is. A limit order, on the other hand, is about control. With this, you say, I only want to buy this stock if it hits a specific price that I said. So one is for speed, the other is for strategy. And you're not doing this alone. There's a whole team working behind the scenes. Your stockbroker is your gateway, the one who places your order on the exchange. The depositories are like the high-security digital banks that hold on to your shares. And the clearing corporations? They're the ones who make sure the money and the shares get to the right places. It's a well-oiled machine, all working to make sure your trade is safe and seamless. Okay, so you know how to trade, but now we need to talk about what to trade. This is where we move from just trading to actually investing. Let's talk about building a portfolio that's built to last. You're going to hear this saying a lot in the world of finance, and for a really good reason. It boils down to one of the most powerful ideas in investing. Don't put all your eggs in one basket. This single idea is the foundation of playing it smart. So what does not putting all your eggs in one basket actually look like? Well, something like this. This is a sample of a diversified portfolio. Notice how it's a mix of different things? This blend is designed to help you ride out the market's ups and downs. Think about it. When the stock market is having a bad day, maybe something else in your portfolio, like gold or bonds, is having a good day. That's the power of diversification right there. And every single one of these slices has a specific job to do. Equity, or stocks, is your engine for high growth. Mutual funds give you diversification and professional management all in one package. Bonds are there to provide a steady, reliable income. Fixed deposits, that's all about safety and making sure some of your money is totally secure. And gold often acts as a cushion when other parts of the market are shaky. They all work together as a team. Now, of course, no investment is ever 100% risk-free. It's super important to understand what you're up against. You've got market risk. That's the risk that the entire market could go down. The best defense against that? Diversification and thinking long-term. Then there's liquidity risk, which is just a fancy way of saying you might have trouble selling a stock quickly without its price dropping.
You manage that by sticking to stocks that a lot of people are trading. Knowing the risks is how you stay in control.
Okay, you've got the tools and you've got the strategy. But the real secret to winning at investing? Well, that's all about your mindset. In our final section, let's talk about how to think like a seasoned pro and build real, long-term wealth.
If you remember just one thing from our time together today, please let it be this. The stock market is going to go up and it's going to go down. That's just what it does. The secret isn't about perfectly timing those swings. It's about time in the market. Patience is your single greatest asset. It lets you ride out the bumps and allows your investments to truly grow over time.
So here it is, a simple checklist to keep you on the right path. First, know why you're investing. Set some clear goals. Always do your own homework before you buy anything. We've talked a lot about diversification. Stick with it. And this is a big one. Do not make decisions based on panic or rumors. Keep an eye on how you're doing and stay informed. These habits are what separates successful investors from the rest. At the end of the day, the stock market isn't just about stocks and charts. It's a tool. It's a powerful tool that you can use to take control and build the financial future that you want for yourself. It's about empowerment. So there you have it. You've got the roadmap, you know the rules of the road, and you know the destination is a stronger financial future. The only question left is, where will you let your investment journey take you?